Let's bring on board Chakri Lokapriya as well, who's joining in to discuss fundamentals and the individual stocks. Chakri, we're all over the moon, certainly with yesterday's massive feat. But for the equity markets, it looks like it's been the broader markets that have been zooming away. What's your assessment of the kind of outperformance that we've witnessed recently in the mid and the small caps? And do you have any particular strategy here?
Yeah, the mid cap and small cap stocks have done well and will continue to do well, simply because they've been recovering from an earnings deficit over the last 2-3 years, and now the growth is coming back. Many stocks have run up, but there's still many stocks which are still very attractive. Now, over the moon is still a good theme because if you look at the different stocks, whether it's a large cap L&T or a mid cap like Hindustan Aeronautics, it opens the global market now for these Indian companies and the cost effectiveness at which the Chandrayaan moon mission was launched. And the multiples, actually, the stocks have had a phenomenal run, but they're not really that expensive. So whether you talk about L&T in the large cap, MTAR mid cap, Hindustan Aeronautics, which developed the landers, Bharat Electronics, which developed some equipment. There are a number of companies. And as when it brings the attention of global investors like Elon Musk, that's an important catalyst for orders coming for these companies' ways. And by the way, yesterday there were 8 million YouTube hits for the show versus SpaceX, which is Elon Musk, which had a 4 million hit.
Yeah, indeed. We were the first ones to attempt a South Pole landing, weren't we? But anyway, let's talk about what the GIFT Nifty is indicating right now. Once again, a very quiet start, but it seems like slowly we're inching back towards that 19,500 print. Kunal, I do want to talk about some of the stocks that Chakri as well highlighted. The likes of BHL, which saw a significant breakout day before, and then, of course, L&T, which continues to hold up. Do you think there's further upside in these names in the near term?
L&T is classical in nature because the stock has changed its trend, its behavior quite dramatically in the last 3-4 months of this market rally, of this rally for the stock itself. And I think from 2,200 when this move started off for L&T, it was a very gradual paced move for the stock, which is a typical behavior of the stock price. And then, I think somewhere around 2,400, 450 mark is where the pace accelerated a bit for L&T. The stock went into a breakout at 2,700 mark. There was a mild bit of consolidation for the stock, but even, the stock has given a breakout post at 2,700 mark for itself. So, time and again, the stock has proved that there has been a change of behavior, change of trend for L&T. The stock is doing exceedingly well. I believe that it still looks very attractive at current levels. BHL could be a classical case of possibly a turnaround or a catch-up of a huge underperformance. The stock was a huge underperformer over the last so many years. 80, 85 broadly was a huge resistance for BHL. The stock day before yesterday clocked that 110 plus mark, making it as a 4-year, 5-year high for BHL. And with momentum coming back, volumes looking very, very strong for BHL in the last 1-2 weeks, I would believe that the stock should be up for at least 125 to 130 over the next 1.5 month.
Okay, that's the word coming in on BHEL. But in the meantime, let's also get in a take, Chakri, from you as to what the outlook has been on Jio Financial Services, given that we were just discussing it a bit earlier as well, third straight day on the trot that it's been on lower circuit. What's your assessment as to what this means for the shareholders?
Yeah, in terms of the technical selling of passive funds is on one side of the equation. The other side of the equation is, the Jio actually has a very unique situation in the sense companies build their businesses gradually over time and then raise capital to meet their business requirements. Here is a company starting off on the block, Jio, with capital already in place, and then now looking to grow the business faster. This will allow it to grow much faster. Even the implied valuation, all the stock about fair valuation is actually very low numbers. Because you start applying the multiples that you would to NBFCs, then there is a lot more upside. So once the technical selling is over, I think Jio Financial actually does much higher, goes much higher.
Okay. 28 points higher for the GIFT Nifty, and we are going to be cruising very, very smartly. Chakri, we've seen a massive rise in companies which have got anything to do with India's space program, and I'm talking about the stock price appreciation, whether it's L&T or BHEL or even Centrum Electronics. How would you approach that space now after the success of Chandrayaan?
Indeed, if you look at companies like the names that you mentioned, L&T, even take Bharat Electronics, Now, Bharat Electronics or Hindustan Aeronautics. Now, Bharat Electronics is expanding its range of products, and it's including a lot of technologically advanced components into its business. Now, this makes this company and companies like MTAR and Hindustan Aeronautics very attractive to investors, not just investors, businesses, such as the SpaceX program of Elon Musk, there is a huge new race. Earlier it was the arms race. Now it is into discovery of new rare earth materials, which will help green energy, etc. So, which means there is sufficient order book out there from global investors, and so it now opens the export markets. So, companies which PSU companies have been given lower multiples. Defense companies were given lower multiples in the past because of the limited order size, but now I think they will be a re-rating.
In the meantime, some of the other stocks as well that within the broader markets that did fire up in yesterday's trading session. You did have the mid and the small caps, as we said, that did manage to outperform. There was something like an SCI, RCF, MMTC. They all rallied hard and fast. And Sun TV as well, up about 5% in trade yesterday. Let's get in your thoughts on the charts, Naresh. How are these counters looking?
Sun TV is the most interesting one, given that the way the stock has gone sideways for a number of years now. So if you look at the stock, every time over the last, say even from pre-COVID, every time the stock would come to 550, 570, the stock has collapsed. Even back in 2020-21, it made multiple tops around 550, 580 levels. Back in 2022 also, the stock came to 550, 560 levels and corrected back to 400. The interesting part is yesterday is the largest volume the stock has seen in the last 1 year. So giving some first indications that the stock could be changing tracks. But for now, I would wait for it. A short-term target price is 600, 620. That is where the previous high is in 2021. So for now, should move ideally towards 600, 620. And once we go beyond that, that is where we call it as a multi-year trend change. So for now, the stock is on radar for a shorter term trade, but it could develop into a multi-year breakout.
Chakri, there was an interesting discussion that Nikunj had with the management of Bharat Forge, and they were talking about their long-term growth prospects, really riding the manufacturing wave, saying that they're confident that their ROC will be 22 to 23% by 2025, etc. Just wanted to get in your thoughts on Bharat Forge in particular for the long term, and anything else within this space that you believe merits a mention.
India is going through a manufacturing renaissance in great part thanks to the government initiatives like PLI. And Bharat Forge has made use of that and expanding also into the defense space. While its defense foray is still very small, its manufacturing, the forging space is still very sizable, and it's looking to expand its EV portfolios, apart from the regular portfolios. Now, a combination of all these things, if you ascribe individual valuations, and plus its export market which has a very good market share. Now, some of all these various parts, very different businesses, underlying theme being manufacturing, I think Bharat Forge does well for the longer term. Shorter term, I think, the valuations kind of run up there.
Which has been in focus is Torrent Pharma as well as what's happening with Cipla. Now, the Economic Times just yesterday reported that Torrent has actually joined the fray for Hamid family's stake in Cipla, and it's up against the likes of Blackstone as well as Baring PE. But this chatter is only gaining further momentum. Now, a couple of brokerages believe that this is going to be sentiment negative for Torrent Pharma. They're saying that Cipla's business is margin dilutive to the TRP. It's got higher exposure to US R&D, low margin ROW, as well as the Saga business as well. And it remains to be seen if any changes in the settlement to generic Revlimid, which can impact Cipla's US market share agreement or not. And plus, obviously, this acquisition is going to come in at a heavy price. So will that be able, is that something that's going to be digestible on Torrent's balance sheet or not? Now, both these stocks were under pressure in trade yesterday. Of course, that's the this year move on Torrent Pharma, and the stock has climbed up 25%, and I think Cipla will be an even better chart. But yesterday, both these stocks were under pressure. Having said that, India business of Cipla is nearly 2x of Torrent Pharma's business size. India business definitely is a good fit for Torrent Pharma. There's no taking away from that. But Chakri, how are you mapping this news flow, which is doing the rounds?
I think it's now a fairly well-established fact for quite some time that Cipla is looking because it's next gen, etc. issues, and so Torrent Pharma is pretty much trying to consolidate its space over here. But this will lead to a fairly significant amount of earnings dilution due to a couple of reasons in rationalizing the portfolios and as well as the balance sheet issues. So against this backdrop, I think Torrent Pharma has already done its bit running up. So I think we would wait on the sidelines.
Kunal, where is Pharma headed? We had a deep swell. Is this the beginning of a new multi-year trend in Pharma? I mean, could they do, let's say, what banks did in 2022?
Very much possible, and I think this time around the change could be that large cap pharma stocks, few of the large cap pharma stocks may not participate in the same gusto. Like for example, Sun Pharma is nowhere closer to its 2015-14 highs. I think 1400 or 1500 was the high for Sun Pharma. In that time frame, the stock is still at 1100 or 1170 odd mark, still struggling. Cipla, Lupin apparently has done pretty well. Lupin is also nowhere close to its lifetime high levels, but the stock, I think from 700 odd levels, has recovered very well for itself. So there are few large cap pharma stocks which have recovered, but then when you look at the first 3 months, the first 6 months, the kind of participants which had happened, it was actually the mid cap names which outshined the large cap pharma stocks. I think Zydus Life is one of the best gainers so far on a YTD basis, followed by Aurobindo Pharma, Glenmark Pharma. So these are the ones which have been beaten down significantly. They are the ones which are seeing recovery. Large cap pharma stocks were the ones which were late to participate, and they're still into their own very steady gradual uptrend. There is no major or a swift momentum which is happening to the large cap pharma stocks. So I think the move should be concentrated on the ones which have been actually performing very well. We'll be very bullish on the likes of Glenmark, Aurobindo Pharma as well as Zydus Life over the medium to long term.
Nuresh, a series of power stocks starting from NTPC all the way down to JP Power. The power space is charged up. 220 power is great, 440 is when it becomes danger. Is power space now between 220 and 440 where you cannot buy everything and anything?
So I would say if you look at power stocks, the problem is just because this whole sector did nothing for 15 years, the recent moves look a little more spiky in nature. So if you look at Tata Power, which has been the torchbearer of this rally from 2020, the stock went from 60 to 280 levels. And from 2021, where it topped out, the stock went to 200 and we are still at 245, 250. So it's still not reclaimed the previous highs. Then if we go to NTPC, on a non-dividend adjusted basis, the stock only came back to 2007 highs, even after such a move from the bottom and outperformance. A lot of other power names, if you look at PFC on a dividend adjusted basis, may have crossed an all-time high at 120, but it's not done a huge move from 2007. So, and the smaller names like a GMR Power or other names, they've corrected 80-90% in 2008. So the view is if the sector is changing after 15 years, it could continue to surprise on the upside. And the momentum actually starts once we cross 2007 highs, 2008 highs, 2010 highs in a lot of them. So the trend is positive. Say another name, something like a NHPC, SJVN, they've not gone up massively. So NHPC got listed somewhere around 30-40 levels back in 2009. And today we are at 50. So if you look at the quantum over the last, say, 1 month, you may see some stocks have moved up quite a bit. But if you look over 1 year, 2 years, nothing has happened. You look at 15 years, it's been terrible. Terrible is an understatement, given the stocks have gone nowhere. So the view is it's a strong trend which has just started. So we are not at 440. We could be from 220. We are at, say, 260 to 300.
Go back to the Bank Nifty. Why are we going back to the Bank Nifty? Fell 5% down for the Bank Nifty, but yesterday the Bank Nifty did exhibit some signs of life. And you do have a little bit of short positioning, if I may use the word, on the Bank Nifty. So if you're making a case that global cues are strong, there is weekly expiry, FIs have turned net buyers, tomato prices have come down, inflation is seasonal, could it be the turn for the bank Nifty? And could there be a mild bout of short covering in terms of where the FI positioning is or where the market positioning is? So, Kunal, Naresh, let's assume that markets go through a mild bout of short covering like we saw yesterday. If that is true, then where are the shorts in the market? Anyone can take it.
Well, I would believe that yes, banks and specifically the large cap private sector banks, ICICI Bank. So I was looking at the positioning in terms of the open interest. ICICI Bank, Axis Bank, HDFC Bank. These are the three key names where there has been good amount of short built up on the private sector banking stocks. From the auto pack, it's actually the likes of Maruti, which has seen a very high amount of open interest built up. And the price trends have been negative, of course. So we look at this in comparison with the built up of short positions. Even the likes of Hero MotoCorp as well as Eicher Motors, these stocks have seen a rise in the open interest with the price trends a bit more negative over the last 1 to 2 weeks specifically. So these are the few pockets where on the large cap front specifically, where there is good amount of short built up. And if the reversal happens, so the reversal could be two pronged. One is that whether the weaker stocks, they are the ones which recover, like what we saw over the last 2 days, where the mid caps outperform the large caps, traditional large cap names. But yesterday was one of the days where large cap stocks managed to outperform. So, for example, ICICI Bank, Axis Bank, these were the few names which even Maruti I think recovered some couple of percentage points yesterday. So there was a good amount of short covering which was seen on few of those stocks. But then we need to see maybe a second or a third round of short covering that could determine a very powerful comeback from these stocks.
Naresh, where are the shorts? For markets to go higher, you need global support, which is there. You need comeback by FIs, which has happened yesterday. Now the short sellers would say, watch your back, run, run, run. So where are the shorts? Where do you think there could be a bout of short covering?
So the shorts are not really large if you look at, because none of the stocks have really corrected in a big way or say making topping out conditions. But if you look at it, it's very clear banks is the place where there has been underperformance. So we corrected from say 20,000 closer to 19,250 on the Nifty, but we corrected a lot more on the Bank Nifty. We went to an equivalent level of 18,500, 800. Bank Nifty at 43,600 was at the same place where it was in December of 22. So banks is the place. For example, if you look at HDFC Bank, gone nowhere. Kotak Bank, gone nowhere. ICICI Bank made a new all-time high above 960 and the stock is still at 960. So it's the banking space where the shorts are in place. So if there has to be a short covering move, it has to be in the banking side.
No, Aman, I mean, that's my limited point here. You look at, see, you make a case that this market has not broken down, right? If the market has not broken down, what are the chances that it will recover back? For markets to recover back, it first needs to go through a little bit of repositioning in terms of shorts. Not that shorts are intense in the market, but you may actually see a flavor of short covering. If there is a flavor of short covering and there is weekly expiry today, where are the shorts? So I think, Kunal, apart from banks, I would say autos also.
Yeah, few of the autos.
Especially Tata Motors.
Not Tata Motors, Maruti, Hero MotoCorp, Eicher Motors. These are the three names.
So if I have to put a graphic out saying that where are the shorts, what names would it include?
So from the auto pack, it will be Maruti first.
No, across the board.
So these three key auto names. Then you have private sector banking stocks, large cap ones, which are also heavy in shorts.
Like an HDFC Bank?
Like an HDFC Bank, like an ICICI Bank also, which had seen a good amount of short pile up. Even Axis Bank to a larger extent. These are the 6 names which I do track very closely and I've seen the data.
Okay. Chakri, I'll go back to Jio Financial Services. And my point is that, look, there was a real value which brokerages had given to Jio Financial Services. Between 160 to about 190 or 170 to about 200. The price discovery happened at 260. So the price discovery happened in 260 and now the stock has fallen by 15% from its listing. What is going on? I mean, if the price discovery happened at 260, when the stock is listed, how come it is falling? Because it's the market which 20 days ago only discovered the price.
Indeed, and every day when I ask my trader, clearly the amount of build-up on the sell trades which are by the passive funds is still shows no sign of abatement. So they will sell irrespective of whether the date is pushed few days this side, that side. Now, so the price discovery, I think, will happen once this technical selling is over. And I still strongly believe that, having been it starts off the race in a very strong place with strong capital, which is the number one requirement for any NBFC. So, which means I think over time, it'll actually see a re-rating of the multiple, which still on a fair value basis is hardly about a couple of times book value, where it should trade much higher given its NIMs will be much higher.
Let's get in a sense as well, Chakri, as we're now gearing up for the festive season. It definitely is going to be very critical for a lot of these consumer durable companies as well across the board. What is it that you're anticipating from this festive season, and the kind of cheer it could bring even for, say, FMCG companies?
FMCG companies, probably the uptick in terms of consumer staples, probably not much in terms of the traditional, other than the traditional bonds. Whereas companies which are hugely underperformed, companies like Crompton Consumer, Voltis, these companies have done nothing for fundamentally and valuation-wise for the last 1 or 2 years. They simply haven't gotten their product portfolio right, no pricing power, no margin, etc. Recent spends by the consumer for around the August 15th weekend, if there's any sign of indication for the festive season, will show that these companies, consumer electronics companies, will begin to make a comeback. So I think that, including Havells, Crompton Consumer, these companies, I think look okay.
Where is SGX? Or not SGX, sorry. GIF Nifty. Muscle memory. It is GIF Nifty, not SGX. It's come to India, not in Singapore. 33 points higher. So, Naresh, I'm just spending a lot of time in understanding the Nifty today. Why? Because everybody in a sense is now on their edge. Short kare, long kare, breakout hai, breakdown hai. So the breakdown has failed. Now breakout should be the trade.
So say 2 days back, I turned a buyer because it was a risk reward trade at 19,350, 400. Now the next say view is when we cross 19,600, that is where it becomes a breakout trade. The flag formation, which has continued from 20,000, 19,000 to 19,250, breaks out. So out here, it's a hold or a buy on dips. And on the way up, if we cross 19,600, it opens up a 400, 500 pointer move. So for now, it's a hold, and closer to 19,400 is where your stop losses are in, risk reward is great. You have a 100 pointer risk and a minimum 200 pointer target, and this could even go back to 20,000. So the case is buy on dips with a stop loss below 19,300 now.
19,539. The GIF Nifty, not SGX, is indicating that we are in for a strong start. Power stocks, Chakri, we've discussed them, but I want to go back to power utilities specifically, not power capex, not power ancillaries, not power service providers like REC and PFC, which give financing. I'm specifically talking about this whole comparison of solar versus thermal. There is a Tata Power which is not expanding in thermal, and there is an NTPC which is expanding in thermal. Which way would you vote? Clean energy or fossil fuel fired plants?
I think both. For example, if you take NTPC, the reason for the underperformance was very well known. Even now, today, after the run-up, still the plant load factors are only at about 70%. So which gives it sufficient upside in terms of operating expansion. Second is, with the new, all those environment treaties, India is supposed to be compliant by 2070. So which means if NTPC starts establishing thermal power plants today, and its useful life is for the next 35 years, it would still meet the 2070 deadline. So it has given a new lease of life because India is still a power deficient country. Thermal is still, as the recent Ukraine war has shown, it's come back to life thermal. That is, even though it's not clean and all that stuff. So I think there will be a re-rating, continued re-rating for NTPC. On the other hand, companies like Sterling Wilson, which are not only service providers, but also now looking to establish some presence in the solar, in the green space, both in India and outside India. Those companies, again, will see a significant re-ratings as they clean up their balance sheets because of over-excesses of the past, and also now And so that will provide them with new legs of growth. So I think both the green and thermal are looking good, because in the case of NTPC, they'll also acquire a number of these companies from NCLT.
Let's get in a sense as well as to just waiting by for those pre-open rates. But wanted to also ask you about your outlook, Chakri, when it comes to the entire metals basket. Are there any preferences within this space?
Have kind of underperformed. Valuations are still valuations are attractive, but the business momentum is still just not there because of the global uncertainty, and therefore, while Jindal Steel and Power, the valuation is still probably about 5 times EV, but we would still stay away from it as a sector, but maybe a couple of companies like Jindal Steel and Power, maybe Hindalco.
The Chinese factor. And with economists as well talking about the activity in China's economy skidding. So that too will be another factor when it comes to the metal stocks. That's the pre-open rate, 19,550 for now being held on to. Let's find out what the mid-cap strategies are as well from our chartists. And Naresh, what's looking good today?
Banks again. The next bank which I look at is Federal Bank, which I've recommended before. Finally, the stock has broken out above the 138 mark, as well as hit a new 52-week high. Clearly, a good enough consolidation done, a range-bound move done, multiple bases at 120, similar tops at 138, 140 crossed. Finally, showing a lot of leadership. Yesterday was strong volume, so this could be a start of a new fresh uptrend for the stock towards 165. Stop loss to be kept at 135.
Okay, those are some stock strategies coming in. Let's just take stock of what else is going to be in focus today. Let's see what Reliance is up to in the pre-open rates after that investment coming in into Reliance Retail. Remember, QIA has picked up about less than 1% stake in Reliance Retail for a valuation of $100 billion. So that's going to be one stock in focus. Surely put a soft floor at least to the stock, and it's indicating an uptick of about 1.25%. But Kunal, what are the stocks on your radar?
Well, Paytm is something which in the last half an hour, last 1 hour moved up pretty well above the 900 mark. So looks attractive from a short-term trade. 956 as a target for Paytm. Stop loss at 886.